I'd like to call the meeting to order. This is the subcommittee for the audit review. And I believe there is a draft of the audit that we'll be talking about tonight and voting whether or not to approve the audit. I'm going to turn it over to Cheryl.
Thank you. So online, we have Mr. Craig Peacock from Powers & Sullivan, who is our independent audit firm. And he has prepared for us tonight 2 audit reports. I'm glad to say we have no management letter because we're that good. So at the audit subcommittee, because Craig, so that you know, our chairman is brand new to the committee and she was named chairperson. So she not really sure what goes on here. So I just want to say a little bit about it before you start. So at this level, at the subcommittee level, Mr. Peacock really does like a deep dive into the audit reports, both the financial audit report for general budget and also for the grants. And if there was a management letter as well, he would bring that up so that the subcommittee knows pretty much what's going on with our audit for last year. At the school committee level, he really just talks about the high points to minimize the time. But as part of your report, you can also repeat some of the things that he said. Okay. Thank you for joining us, Mr. Peacock. It's all yours.
Okay, thank you very much. Good evening, everyone. Thank you for having me here. And as Cheryl mentioned, we're here to talk about the fiscal 2022 audit reports. And, you know, Cheryl kind of started it off by saying there's no management letter this year. And I usually start off on the financial statements, but what I wanted to say was, the Quabbin Regional School District's audit is one of the most well-run audits that we actually have as a firm. And we do over 100 of these, whether they're schools, cities, towns, collaboratives, what have you. This is the industry we're in. Cheryl, I can't thank Cheryl, Stacy, and the rest of their team enough, because when, you know, you're all there, 52 weeks a year. We're there for 2, maybe 3 weeks, depending. And the whole finance team, when we're out there, they really do make it a priority to work with us, assist in getting the info we need, answering our questions, and they couldn't be more prepared to do so. It's almost as if they're preparing for the audit as well, prior to us coming out. As well as, I still have a couple of, let's say, school audits that are going to be occurring in the next few weeks because the finance team, just can't get the I's dotted and the T's crossed. Cheryl and her team, 2 to 3 weeks before we're ready to hit the field, we probably have 80 to 90% of what we need loaded up to our portal. And then when we, this year we came out into the field, we worked, at the school admin building, and then we wrapped up back in the office. And I know, again, we're a little bit late this year in the presentation. However, it has absolutely nothing to do with your finance team or anything to do with the Quabbin Regional School District. And honestly, it has nothing to do with our team or our firm as well. This year, what we noticed was there's a few actuaries that do most of the other post-employment benefit and or pension valuations throughout the state of Massachusetts. And this year, they were really backed up. There was a lot of new valuations that needed to occur. And quite frankly, we were out for our year-end work with Cheryl and her team, mid to late August, and we did not receive the Worcester Regional Retirement Report until the 30th of November. So that's clearly the delay there. So we had to wait for that info, which is a pretty major component of the district's financial statements. There's a fair amount of work that goes into analyzing the report and getting it into the report for presentation. But so I just wanted to start off by saying the district's audit year after year, really goes well. My team, if when we do our scheduling in the spring, you know, we always have different people that are moving up. And so sometimes you split people up and the team changes a little bit, but overall, everybody asks to be back on because we, you know, not all clients are really clean, and some audits, you know, you get a little stressed out, lack of a better way to say it, just because you have a lot of work to do and your particular client's not getting you what you need. But boy, everybody will come on to Quabbin's audit without a doubt. So, you know, again, the timing of the audit was very similar to previous years. We usually come out in May for our preliminary. We usually look at, we're able to maybe start the original budget for the school, the district, as well as looking at the grants, federal grants that need to be audited under the Single Audit Act. And year end usually is in about mid to late August, again, same time this year. And again, drafts this year weren't issued till 12/6, and that was simply due to receiving Worcester Regional on 11/30. So we were all keyed up and ready to go. We were just waiting for that report, and we tried to turn the reports around quickly just because of the delay. When we arrive at the district's offices, again, your team is audit ready, as we like to call it. Everything is ready for us. When we work with your finance team, our questions are answered. It's, as an auditor, we have to maintain our professional skepticism and, you know, try to determine our people or particular clients trying to pull the wool over on us. Are they trying to, you know, not get us information in a timely manner? So maybe we stop asking questions or what have you. And when you ask a particular person a question, not necessarily at Quabbin, but in general, and if someone looks at you and says, oh yeah, I can get that information, and it takes them 3 or 4 days, well, our professional skepticism antenna go up and say, you know what, there's something wrong here. Either these processes are not occurring timely, they're not occurring at all, and someone's working late to try to put all this information together. But working with the district's team, it's almost real time. If the answer is not on the tip of somebody's tongue when asked, they always are well aware of what we're asking and about, and it's literally a very short amount of time, and clearly the same day, that the support and everything is provided to us. So it's very evident and very clear to us as auditors that your financial office is very, you know, in tune with the budgeting, the grants, everything that's going on in that office, and very well aware of what we need in order to conduct the audit and support. You know, as always, we have to go right down the balance sheet, you know, so that significant balance sheet assets, if you will, cash being one of the largest, $11.4 million this year, roughly. All bank accounts were properly reconciled without any unknown variances or unknown reconciling items. Everything is cleared up within, you know, the next operating cycle, meaning to me the next month, before the next bank statements come in. There's almost never anything that I see hanging out there for months, which is excellent. Capital assets is, you know, the next large asset on the district's financials, about $24.7 million worth of capital assets this year. We look for support to any additions, if there's been any deletions, that type of thing. Again, information is always ready and available for us. As we work our way down the balance sheet and we get into the liabilities, you know, there's obviously the long-term debt, which the district, hasn't had to go out for any new debt in a number of years. So there's about $525,000 left of long-term debt on the books of the district, which is being, paid down each year. Compensated absence is another large one, which is the sick accruals and such that people are eligible for upon retirement, which was approximately about $1.7 million this year, very consistent with last year, up approximately 45,000 or so, which is pretty standard year over year if there hasn't been a whole lot of that time used up. And then, the two big elephants in the room, if you will, that everybody talks about is the other post-employment benefit liability and the net pension liability, both of which for the district went down this year. The OPEB liability saw a $7.2 million decrease, and the pension liability saw about $1.1 million decrease. Both are the result of very strong earnings cycle for the pension systems, as well as the fact that because the feds have been raising the rates and the actuaries look to complete the OPEB valuation, depending on how much money's in an OPEB trust and some other attributes they have to look at, they, in determining along with the district what the discount rate to be used will be, it's also, they look at the 20-year long-term bonds and such, and because the rates have been ticking up, they were able this year to go up about 0.75% or so on the discount rate, which really helps a lot in the long run on the total liability. So the ability to go up on the discount rate, the fact that the funds earned significant investment earnings this year, essentially correlated to, again, a $7.2 million decrease in the overall net OPEB liability for this year. We also, each year, will look at the various cycles, the revenue cycle, payroll cycle, vendor payment cycle, and then just look at journal entries that are being recorded within the ledgers. And what we'll do is we'll pull a sample of, anywhere from 25 to 40 of each cycle transaction, 25 to 40 different transactions throughout the fiscal year. And we'll look for the supporting documentation. We'll look that there, if it happens to be an expenditure side, we're looking that it's an allowable cost, it's charged to a proper line item, that the proper approvals are in place. And I'm happy to say that, again, we were provided with all proper documentation to everything we asked for. And we did not discover any irregularities or errors in the information that we received in essentially tying that back to the district's general ledger. Mentioned we also look at the budget. So we'll start from the original budget and work our way all the way through to the final budget, looking at the various votes along the way, looking to make sure that the district's communities have been, properly notified and involved. I just can't really say enough in the handle that your financial team has on the finances of the district. I mean, I'm impressed every time I come out and ask questions. And I mean, both Cheryl, Stacy, they happen to be the main two contacts that we work with quite a bit, as well as many others. But both are very willing throughout the year to send an email, make a phone call, any questions that come up, or maybe an oddball transaction, if so, and maybe to discuss it, to determine, are we thinking about handling it correctly and such. And more often than not, they're dead on, but myself, we do that here amongst the various partners and such. We always utilize each other's, experience and education and bounce things off of each other. So from an auditor standpoint, it's actually quite refreshing when a client is willing to call, and whether that's once a fiscal year or once a month throughout the fiscal year, it really benefits both organizations, the district as well as us as an audit firm, because one, the district then is able to handle and record whatever the particular transaction in question may have been. And for us as the audit firm, we're in the know, if you will. We understand what's been going on at the district. We understand where maybe some of the more unusual items may have occurred, if any. There have been the last couple of years through this whole COVID pandemic, with all the different grants that have been received. There's been the ability to, maybe move some general fund money and utilize some of the COVID funds and such for a lot of those costs. So it's the last couple of years has been a little different for everybody, all of our clients, quite frankly. And but it's refreshing when we're able to have those discussions real time with our clients. And it definitely happens with the Quabbin Regional School District. And, it just really, it helps the audit go smoothly because we're kind of already in the know of different areas, if you will, and or your team, has talked out certain issues that may have, not going to say were confusing, but may have prompted some questions, and now we're all on the same page. So it really makes the review of the ledger and the review of the various sections much smoother, if you will. And with that said, what I'd like to say is, again, this year, as an audit firm, we're happy to say that we do not have any permanent adjustments for Cheryl and her team to record to the general ledger. So that means that everything that we asked for was properly supported, and we received proper and supporting documentation for all, whether it's assets, liabilities, the budget, what have you, anything that deals with the finances of the district. We were presented with that information in a very timely manner upon request, which then correlates to the district receiving an unmodified opinion on your financial statements, which is that is what you want. That's the best opinion you can get. That is what we call a clean opinion. And Cheryl did mention up front, no management letter this year. The last few years, and even before I was working with the Quabbin Regional School District, I had reviewed some of the management letters along the way, and never have I seen a comment that was maybe directly correlated to something that just went completely wrong or something of that nature. Most of the comments for the district have always been to try to either make some recommendations of some new areas that the district might want to think about. Like last year, we tried to make you aware of a potential for starting a compensated absences stabilization fund. But this year, through the conduct of the audit, I cannot tell a lie. Nothing came up that warranted being put in writing. The audit could not have gone smoother this year. And again, the only delay was waiting for the Worcester Regional report, which is kind of out of all of our hands. If we drill down a little bit into the actual financials, into the numbers of the financials, the general fund did pretty well this year overall. Again, the district is typically appropriating about $427,000 worth of E&D each year to balance the budget if needed. Again, this year, it was not needed to actually balance when we got to the actuals. Revenues came in higher, mostly due to the homeless state aid and Medicaid funds came in a little higher than budgeted. And encumbrances were down this year. So mostly in special education, instructional support, and transportation, which allowed more of this year's appropriations. There were still some of the COVID grants hanging around this year, which we'll see when we do talk about the federal report. So, about $1 million was spent out of various COVID-related federal grants this year. We actually turned back about $742,000 of appropriations this year, which is approximately 400,000 or so more than last year. And that's simply due to the decrease in encumbrances. And, I know that the district works hard in, let's call it May and June, come the end of the fiscal year, to try to process all of that fiscal year's invoices that have been received. I know that they, look to the various vendors if something is open, and they try to get everything paid by June 30th, which clearly occurred this year. And so that was able to, drop back down, which is helping to increase the general fund balance overall. Major funds are very similar this year to previous years. It's made up of the school choice fund and the circuit breaker fund. The school choice fund increased by 113,000. Now it increased by about $1.2 million last year, but the difference is now that we're seeing sort of schools, what I'll say, getting back to normal, all of the various activities starting to occur on both regular and special education and that type of thing. Last year in the school choice fund, there was only a little over $500,000 spent towards the educational process, where about $1.6 million was used this year. But there's still $5.4 million available in that fund for use in future fiscal years going forward. And the circuit breaker fund, how that works is the district is allowed to carry over a maximum of up to the dollar value received in the current year. And when I look back a number of years, that's essentially how the district is handling the circuit breaker account. They're always carrying forward what I see as the current year allotment is always being carried forward to be utilized in the next year. And we had an increase of about $122,000 in that fund this year. And that was essentially directly due to an increase in the circuit breaker funding received this year. And the ending fund balance is I'm sorry, I had it written down right here, $1.3 million, if my brain serves me correctly, $1.1 million, $1.3 million. So that was this year's allotment for the district, which is going to be carried over and utilized in fiscal 23. The only other fund that shows up on the fund statements is what we refer to as a non-major funds, the non-major funds, plural. And that column simply compiles all other special revenue funds, capital project funds, gift and grant funds, that type of thing. It's sort of the catch-all for anything under the GASB 34 requirements that does not meet the requirement of being shown in its own column, such as school choice and circuit breaker funds. And there was an increase in the non-major funds this year of about $472,000. Typically, that non-major column is really all about timing. It's sometimes we receive, whether it's grants, gifts, that type of stuff, and it's spent right away. But quite often, expenditures will sort of maybe lag into the next fiscal year, that type of thing. Sometimes we receive monies up front and then the program gets going. So within non-majors, quite frankly, within all our clients, the increase or decrease kind of goes up and down each year because it's really all about timing in that fund there. After the fund-based financials, it brings us to the front of the report, which is really what we call the full accrual financials. And those financials record everything that the district has, as we spoke of, the other post-employment benefit liability. And those financial statements start on page 11. 11, 12, and 13 are the full accrual statement of net position and the statement of activities for the income statement side of the world. And those statements, they account for, on the asset side, the capital assets. On the liability side, they account for everything out there that, should the district close their doors today, that they could be, on the hook for. Again, as we mentioned, other post-employment benefits, net pension liabilities, compensated absences are clearly the main, as well as long-term bonds payable. Those are by far the main and largest liabilities that the district has. Those are not presented on the budgetary statement or the fund-based statement. That's a GASB 34 presentation. They only make it to the full accrual statements. So they definitely will look different from maybe reports you're used to seeing right out of the district system, because that would be more of the UMIS, the budgetary basis of accounting. And we kind of already touched base how both pension and OPEB had great years this year for multiple reasons and went down. Both liabilities went down this year. The capital asset activity, it was relatively minimal this year, about $231,000 worth of additions. We saw some sort of maintenance type equipment, lawnmowers and that type of thing, as well as some food service equipment and some other miscellaneous machinery and equipment, of which was purchased during fiscal 22. And in a nutshell, that's the financial statements. We were extremely impressed with how the audit went. Again, the knowledge and expertise of your financial team and how well and how kindly they're able to provide and answer questions. And I'd be more than happy, before I moved on to the federal report, if there was any specific questions on the financials, or we could do it all at the end, whatever the board would like.
I think we could probably do it all at the end. Why don't we just move on with the next part?
Okay, thank you. That leads us to what we call the Schedule of Expenditures of Federal Award Programs. That is a report in which we have to look at all federal grants that the district received. And it's not based on revenues, it's based on the expenditure of those federal funds. And that has to get reported. The report is necessary if the district spends over, or let's say $750,000 or over of federal dollars, of which you typically always do. The numbers have, you spent approximately, the district spent $3.8 million this year, which is higher than the 3.2 last year. And if we trend back a few years, it's clearly gone up in these COVID days. And that's simply because the government has been issuing so many different federal grants that the district has been able to utilize for various operations. So that's been able to free up some of the monies that maybe generally would have been appropriated within the general fund, and it's allowed over the, when I look at the trend from, say, 2021, the general fund trended downward a little bit, but clearly operations were, a lot of the operations and such were haphazard at that point because of the COVID pandemic. Some things weren't occurring, some weren't occurring as robustly as in the past. But over these past couple of years, leading us to fiscal 22, the ability to utilize the various federal grants and such has allowed the district to maintain the funds. And this year, we see overall fund balance of this general fund is back over $2.3 million, which is excellent. And we were required, so what we're required to do on the federal report is a major program is going to be anything that's $750,000 in expenditures or more. And then they have what they call a type B program, and that's usually $187,005. So we have to look at the various programs of the district and go through a various process, a checklist of what we call a risk assessment and or a planning assessment to determine what grants need to be looked at. And this year for the district, we had to look at some of the COVID related money, which was called the Education Stabilization Fund, Elementary and Secondary, ESSER, as maybe many of you have heard it referred to, Elementary and Secondary School Emergency Relief Funds. And I'm happy to say that we tested approximately a little over $1 million of the 3.8 worth of expenditures, and we have no findings, no question costs. All proper supporting documentation was provided to us in the district's federal CFA report, as the acronym we use, received again an unmodified, clean opinion. It is the best you can get. The only other report that typically would be issued would be a management letter. And we've kind of briefly touched on it, but this year, really things went well. We try not to, we want to add comments that could either help if there's a process that we see that might be going awry, or maybe a recommendation that we can make that could potentially assist and add value for the district. But this year, we just did not find anything, and this is not the norm. Out of our 100 clients, there's probably less than 5 in a year that don't get a management letter. And quite frankly, I have some clients, I'm embarrassed to say, that have 40-page management letters. And so I think it's a great testament to Cheryl's oversight and her team running the district, asking questions whenever they have them, and or working to always maintain proper documentation, dot their I's and cross their T's. And I can't be happier to say that we did not have a management letter to issue for the district this year.
That's my goal every year.
In summary, that kind of hits on the 2 reports and explains why there's no management letter. And if there's any questions, I'm more than happy to address them.
Yeah, I was just wondering, and thank you, that was a wonderful presentation. It says draft on these. Are these the final reports? I mean, is this done?
So yes, it's done. They're draft reports because what generally will occur is we'll send what we call a final draft. So yes, that is a final draft. And what happens is the district now, the committee votes to approve the report, as well as then both the superintendent and Director of Administrative Services, Cheryl, will sign what we call a management representation letter, which then allows us to issue the final report. So typically, after this meeting, within a day or so, I'm provided with that signed letter, and then we will go ahead and issue final copies, of which, unless anything comes up within this meeting or the next for changes, those draft reports that you have can in fact be considered final.
Excellent. Thank you so much. So I would ask the subcommittee to make a motion that we approve the audit reports for the basic financial statements and the reports on the federal awards program.
So moved.
Can I make a friendly amendment?
Yes.
In my view, there's really no way for you to approve these, but if you can accept them.
Accept them, yeah.
I'd rather they use the word accept. Is that okay, Mr. Peacock?
Yes, yes, thank you.
Yeah, I would agree. I would think,
Okay,
yeah, we should use
Accept.
accept.
take two. Could I have a motion to accept the audit reports on federal awards program and the basic financial statements?
So moved. Is
Not on the committee.
Ned here?
No, he's not.
So then you can second.
Second?
Okay. I got a couple of quick questions before we vote.
Yep.
Again, thank you. And Joanne has stepped up to be chair of this subcommittee. So as she's learning as a new member, to get fully involved in not only the weeds, but to learn the language, the budgetary language, and the responsibilities that come with the school committee, and hence the audit that we have every year. That is fantastic. There's not a management letter. That's fantastic. That's nice. We've been hearing this for many, many years, and you started off, sir, the same way, Mr. Peacock, that audit ready, very competent, caring, committed people to respond to you. I like your perspective when you said professional skepticism is your work, is your world. And to hear that you don't have, I mean, you have to apply that. I get it. But there's no evidence of any type of skepticism as you look at the audit in our books for Quabbin, correct?
I 100% agree with that statement. Just in a really quick summary, we as auditors have to keep our eyes open, if you will, and try to make a determination of, is the information, whether it's on paper or electronic, being provided to us, is it actual original source documents? Have there been any manipulation to the documents? As we're speaking with various personnel, are there answers in line with what we're seeing? Does it make sense to the operations of the district and what we're seeing? We can't just come in and say, you know what, Cheryl does a great job every year, we're just gonna blow through this in a day. We still have to ask all of our questions, and we have to look at each and every section of the balance sheet and look for that support. And I'm happy to say that I don't know that I have another client that I can give such a pretty glowing report year after year. I hate to say this, but once it comes time for your financial team just to move on some year, whenever that is, you're going to have some big shoes to fill. That's for sure, because your team right now really represents the district well.
Absolutely.
Agreed.
In regards to a quick question, I've been listening to this and I try to absorb it and try to understand it. I'll never understand the world of Cheryl. But when you did the federal report and you talked about that there was a 3.8 million that was spent, and then the trends, I heard that, and then there was a figure of 2.3 million. And I wasn't sure to be able to follow that to maintain 2.3 million? I wasn't sure of those two numbers. If we spent 3.8 million, you did the dipsticking in the analysis of the expenditures and looking how things were applied. Then there was a figure of 2.3. I'm trying to understand that.
If I may, please excuse me, let's talk this out to make sure we're on the same page. I think, this is just an assumption, but the 2.3, what I believe, may have been, is I mentioned that the district had spent 3.8 million of federal dollars within fiscal 22 and spent 3.2 as opposed to 2.3. If I said it wrong, I apologize.
Okay, 3.2.
3.2 million that was spent in previous year, being fiscal 21.
Last year, yep.
And so I was just kind of comparing the two. And again, the increase over the last number of years is mostly due to all the various COVID monies coming through from the federal government.
Okay,
Could I add to that?
yep,
I'm going to try some layman terms, Craig, if you don't mind.
Absolutely.
So the $2.3 million you heard is the fund balance amount, or our E&D balance at the close of the year. That's the $2.3 million number.
that's the E and D.
That's the E&D number.
Okay,
Oh,
a matter of fact,
I
Bruce.
apologize. I missed it. You're right, Cheryl. Thank you. I was focusing on the federal report, and the 2.3 and the financials eluded me, but I 100% agree with Cheryl. Thank you for that.
and so when you look, I mean, I know I 2.3 million, which, do you have a percentage of that, of what it is that we now have in the E and D?
Well, our E&D balance is 2.32 million. However, that's not the number you use to calculate what you can bring forward.
Right.
Because within that number is our stabilization account for technology.
Okay,
It's 109 million. And our reserve for encumbrances. So that balance that Mr. Peacock talked about, that at the end of the year, we still had encumbrances that will be brought forward into FY '23 and paid.
Yep.
That's 561,000. So our unassigned E and D is 1,649,551. Give me a minute.
yeah, 1.6, that's
And
that,
actually, the percentage is based on next year's budget amount, not this year's budget amount, so I can't give you what percentage that is.
okay.
But I can give you a percentage of what it was for FY '22 if you'd like it.
Yeah, that'd be great. And what we're, again, we're trying to, again, as we learn not only the competency, but the dipsticking of what it really means of assets and liabilities and the checks and balances.
Yeah.
So that is, oh, yeah, I gotta do one more format.
I have calculated that.
4.6%.
4.6, okay.
But that
And-
won't be what we put in our letter to the towns because that is based on next year's budget total.
Yep. But that's, no, thank you, Joanne. I just want to just mention that, again, it's nice to hear the unqualified, the unmodified opinion, meaning a clean audit. Once again, we say we budget what we need, we spend appropriately, and carry over when and if we can. And then, as you mentioned, Mr. Peacock, that the COVID years, there was that little extra flexibility to be able to move something, especially the ERISA, to the following year type thing. So you've answered everything that I need. I'm trying to learn a lot more. I know there are, there's excellent language in here about the pension obligations, our OPEBs, and we all know about those liabilities. Nice to hear that there was a decrease, you said, in the assessment applied to OPEB, 7.2 million net liability decrease and a 1.1 million decrease on the pension, net pension liability, correct?
Correct.
And that's just due to I think you said the workings of the funds
The
on the state
working,
level and the Fed level to make it go down.
correct. The investments thereof of both the other post-employment funds as well as Worcester Regional's investment allocation and the performance thereof of their investments. As a firm, we're seeing this across the board this year. Again, because if I may, remember, pension systems are reported as of 12/31. So they didn't get hit with sort of the downturn that occurred in sort of these first 6 to 8 months of calendar 22. So the pensions are reported as of December 21, excuse me, December 31 of 21, which is why they still were able to show such a large investment return.
So next year, that's going to be not the same.
Agreed. It isn't an up and a down thing, but hence why the actuaries are still able to utilize, let's call it usually in the 3 to 7% range, depending on what they're looking at, for an average discount rate, because they're projecting out, 30 years type of thing, as opposed to just looking at the activity and what's occurring in the markets in the current year. So it usually, maintains and kind of averages itself out over the years. There are good years and bad years, as we all know, but this was a particularly good year for the systems.
Thank you. Joanne, that's all I had to,
Yep, okay, so I'll call for the vote to accept.
so it's just, yep.
In favor, yes.
Okay, so from a subcommittee level,
Unanimous.
Yep. And we will bring this forth to our entire committee tonight to vote for acceptance.
and then, Mr. Peacock, you will be able to hit the salient points of the report, of the final report that you have here, which is called the draft. We know that, and we understand why it's that way until it's voted of acceptance. Would you be able to report out the salient points when I report out on the audit subcommittee?
Absolutely.
Thank you. Okay,
So
Okay,
he
so
will
we should
need to
close.
log out of this meeting and
Yes.
log into the meeting.
Yes.
So Craig, you'll need to log out of this meeting and then log into the other meeting,
Into the
the
other
school
one.
committee meeting link. Yes.
We'll
Okay,
be starting the
perfect.
Thank you so much for all your time.
No
See you.
problem.
Thank you.
And just one very last comment. Throughout a couple of the questions, people have mentioned always looking at and trying to gain an understanding of the various movements, the numbers within the financials. As a district's audit firm, please, Cheryl knows how to get in touch with me at any time. I am always available for a phone call, to come down to the district's offices if there's ever anything that, maybe as a subcommittee, someone, I don't want to say doesn't understand, but maybe wants a little bit more information on or a better understanding thereof. Please don't ever hesitate to track me down and utilize our services. We're more than happy to help with anything we can.
excellent. Thank you so very much.
Okay,
Thank
see you in a
you.
few minutes.
Thank you.
Bye.
Okay, thank you.
Thank you.
Andrew has to end this.